With the biggest buzzing business news of the day, I'm Vikram here on this edition of ET Now's Business at 9. Hello and a very warm welcome. Up front, we are tracking exclusive information on ET Now. This is about the market watchdog, the Securities Exchange Board of India, SEBI like we know it. And they're mulling a reduction of the minimum ticket size for SIPs to as low as 250 rupees a month. Currently, it is 500 rupees a month. Let's find out more about this. My colleague Ankur Mishra is joining us here in the Mumbai studios. Ankur, this is an interesting proposition before the SEBI, and what you've heard so far is going to be interesting considering this possible reduction in the ticket size of a monthly SIP.
Yes, market regulator SEBI is said to be working with mutual fund industry for rupees 250 SIP. Yes, you heard it right. Current minimum limit is 500 for SIP, that is systematic investment plan, which you can invest monthly or quarterly. Now that limit is considered to be reduced to 250. It could be a actual sachet movement as per the sources we spoke to. However, let me also make that clear that it is at a discussion stage with regulator. The regulator is just assessing the impact of reducing the SIP's minimum limit. What will be the implication? That study is currently underway by the regulator, and only after that, as a process, there will be draft guidelines, and finally the guidelines will be released by the regulator. But for now, the idea of bringing rupees 250 SIP is on the table. It is considered with the mutual fund industry, and remember, as far as the latest data released by AMFI, the AUM of mutual fund industry has touched 50,000 crore, and if you talk about SIP, that has also crossed 17,000 crore.
17,000 crore mark has been crossed. There is no doubt about this. This is a proposition before SEBI, like Ankur is telling us, and thanks for that. But let's get perspective of what this could really bring to the table for the markets. And Dhirendra Kumar is joining us to be able to decode that. He is, of course, CEO of Value Research. Always great to have you with us, sir. Tell us, we are speaking at a time when these SIPs have been hitting record highs. Markets are euphoric. Bulls are raging on. And from what I'm picking up from several market experts, is that the markets are now part of this structural story built on projected Indian growth. So at a time like this, do you think a reduction in the monthly ticket size of SIPs could bring in even more retail participation? And how do you think this could help this upward momentum we're seeing in the markets right now?
No, I think, it's not about money. It is about financial inclusion. Because 250 rupee coming from 5 crore people could be, I think it is quite a habit-forming thing. But, if we look at what has happened in the mutual fund, this is the only category of retail financial product, retail savings and investment product for, Indian citizens, where you have large number of happy customers. I haven't come across anybody who says that, oh, I bought this ULIP and, I became wealthy, or I did this or I did that. And, in fact, on the contrary, all the traders in the markets, they came out with this report where 92% of the people lose money effectively. But still, investors are quite excited about it, and just for the, for the fun of it. But here you have a category of product which has been democratized. So there are two ways of looking at it. One is that 250 rupee could be a great enabler and inclusive thing. And if somebody, it is actually a crash course in savings, because if somehow by accident somebody starts a 250 rupee SIP, then I think in a matter of 1 year one will figure out that, okay, what a performing asset it is. It is experiencing a great compounding vehicle, compounding at a higher rate, with all the attendant, risks being addressed through its diversification. So I think, it's a great move. It can enlarge and broaden the base, but one should not look at it as a move whereby, a lot of will start pouring into the market.
Said, this is about financial inclusion. It is about democratization in the markets. The question is India ready for this kind of democratization at the level that we are at right now? Tell us about the investor profile, Dhirendra Kumar. How has that changed in this bull phase as more and more take to the SIP route? What do you see as the biggest shifts in the nature of investors and the way they're going about their investments?
No, one is that, I don't know if you noticed today, Economic Times carried another news which is the government is considering that there should be just one KYC. That is another big speed breaker in, if you want to buy 50,000 or 5 lakh rupees worth of gold, you can buy it, the way you buy a chocolate. But if you have to do a 5,000 rupee investment in a mutual fund, you have to go through the whole KYC process, and which is compliant with which is designed to prevent money laundering. It is just to be compliant with the Prevention of Money Laundering Act. So and then we have to go for it. Procedurally, it is very difficult because we have to go through it time and again. The talk is that if there will be one investment, if you have been KYC'd by, or know your customer compliance is done by one financial entity, you don't need to go through it time and again. This, I think, could be another game changer, because 250 rupee SIP, and when I look at it at that, if you have a bank account, then you don't need to do your KYC, just provide your bank account and you're good to go. So getting started becomes easy, and I think that was it is badly needed. It's if you suggest somebody to start with investments, getting started is so tough. You need to have this, you need to have that. Of course, we have gone about smoothing the process quite dramatically. Still, it is not that easy.
Well, we'll have to see exactly how these shampoo size SIPs, whether this really defines the markets the way that they are right now and how they're likely to change by way of the breadth of the market. Does it also add depth in the market at a time that we are seeing this bull run and we're projected to grow even higher? Dhirendra Kumar, always a pleasure getting in your perspective. Thank you very much for joining us on this edition of Business at 9.